Hello, this is Ivan Alon, the founder and chief investment officer at AWAME. Thanks for joining me on this monthly podcast. And given today's excitement around NVIDIA and other AI stocks, but certainly NVIDIA being the most dominant in the AI space and really driving a lot of that euphoria, and essentially it's entering correction territory as of today. Today it was down about 7%. Just a few short days ago it was as high as $135 a share. Now down to about $118 a share. So maybe some of the luster is coming off of AI. But about 3 weeks ago, I shared what I consider an extremely valuable white paper published by the National Bureau of Economic Research, NBER. And you certainly can go to LinkedIn and type in NBER, and you will be able to pull up this white paper for yourself. And also I posted it, like I mentioned, 3 weeks ago. But in short, what this paper details, I think in a pretty elaborate way, is that the ultimate improvements in productivity that are expected from AI over the next decade, so over the next 10 years, not talking about 20 years or 30 years from now, but just the next 10 years, is a very modest figure. Essentially, the National Bureau of Economic Research projects that it is no more than a 0.66% increase in total factor productivity over 10 years. So this is what you could call a non-trivial amount, but it's certainly a very modest figure. And relative to the stock valuations that we're seeing out of AI companies, or companies that have been linked to key supporters within artificial intelligence operations, there seems to be a little bit of a disconnect here, where the projections that are made from perhaps the leading economic research group is that it isn't necessarily a panacea of productivity. And what's so interesting is that they focus on a particular aspect of AI that I think is easy to forget about, which is that a lot of the tasks that AI will be able to support in productivity in the workforce are what are termed as easy to learn tasks. And really that's not the most valuable thing. What is the most valuable thing are the hard to learn tasks. And that's going to be highly dependent on many factors as we go forward through time that require decision making of the human creators, of how much are we really willing to be delegating in these hard to learn tasks. And so yes, the technology is, I think everyone understands that the technology can be incredibly useful and absolutely be a great supporter in productivity, and we're certainly seeing that in this particular working paper, that it will in fact be useful, but only is it easy to see that these easy tasks can be outsourced, and really the amount of increased productivity that we're going to get out of it in our economy is quite modest. And of course, the hope is that hard to learn tasks and very important decisions that need to be made can be made by AI at some point in time. But there's a lot of uncertainty about what is the quality of that decision making when completely independent of human interaction or human interface or human oversight. So this is something I think that's important to keep in mind when thinking about new technologies or new trends. And this, of course, could be applied also to another very favored new technology, which is blockchain technology. And certainly, there's offshoots from that, like cryptocurrency, for example, which is different and apart from blockchain technology. But new technologies are usually followed by periods of time from their introduction to work out their utility, their usefulness within an economy. And certainly, if we turn back the hands of time many decades and look at the impact of robotics, for example, in manufacturing, and this is something I wrote about last year, the contribution of the manufacturing sector in the United States to the gross domestic product, to GDP, is the same contribution to our economy. About 12% of GDP is in US manufacturing. Well, that's the same contribution as it was 70 years ago. However, the amount of people working in manufacturing has been reduced by nearly 80%. So the workforce moved on to other things, namely the service sector. But the productivity of manufacturing went up exponentially over many decades. So certainly when I think about what a future economy looks like in the integration of technologies and new technologies and evolving technologies, there is this period of digestion. There's this period of acceptance that certain things can be delegated with very, very high confidence. CEOs of major corporations are not going to be delegating hard to learn items to AI anytime soon. There's going to require a tremendous amount of human intervention and interface for quite a period of time. Certainly in our industry, in the financial services industry, there's a tremendous amount of oversight and regulations and regulatory authorities that we answer to. And if all we decided to do tomorrow was just outsource all of our research and our thinking to some AI technology, and believe me, we're using this technology in a very sort of experimental way off to the side, querying it, prompting it, asking it to fetch information and research and data, paralleling that with our normal ways in which we conduct research and subscribe to many data sets and comb through data and query different, we ask different questions and look for data that could maybe support or help or even counter what our thesis may be. And we find all kinds of errors in the returns of our prompts in querying AI. And oftentimes it comes back with, well, I have no idea, I don't know. I can't find data related to this. Use something else. So the technology, certainly from my personal experience in using various subscriptions and not just the free stuff, but stuff we actually pay for, in looking to glean some additional insight, it isn't that great. It's at its infancy. It doesn't mean it's worthless, but it also doesn't mean that it is the pot of gold and the totality of its incredibleness has been realized. And so I think the market, as it tends to do, can get way ahead of itself on a new thing Think about Cisco and the price of Cisco stock many, many years ago, and how it was, you know, one of the most valuable companies on the planet, and then plummeted to something far away from that. And then it took many, basically a couple of decades for it to get back to that kind of valuation that investors were so excited about at its early stage. So I think these are always things to keep in mind, always giving context to why are the prices of things in the markets reflecting the way they are. And maybe the past couple of days is, a really normal reminder that sentiment can change very rapidly and quite dramatically. That's all for this month. Hope you found this deep economic thought helpful. And as always, feel free to send an email if you have any questions or would like to continue the conversation. You can also visit our website at alignwealth.com. That's ALIGNE wealth.com. Take care.